Or maybe that's better. Good morning, good morning, good morning. Good morning, afternoon, good evening. Gosh, sorry, put me off my stride. I think I have my microphone muted. Welcome to the TGI Friday, the Friday the 15th of July, Bull versus Bear webinar. Steve Miley on the call for Trader. So welcome, everyone. We're going to go through our usual regular run through in here today. We're going to take a look at the calendar, what we've had, what we've got coming up on the macro fundamentals side, data side, earnings side, the micro data as well. We'll take a look at some articles from the major news wires to see what's going on, geopolitical, fundamental, macroeconomic factors, and then we'll take a look at some charts as usual. So first of all, just yesterday, so we did close lower yesterday. So initially, remember on Wednesday afternoon, we saw an initial sell-off after the morning data, and then a strong rebound in the afternoon on Wednesday after the CPI data. Then yesterday, the market kind of then rolled back lower, went lower again, and even though we closed lower, we did get another intraday rebound. So we've had multiple sell-offs and rebounds in here. It's starting to be the tail of the tape, okay? Markets weak on the open, weak overnight from the Asian European sessions, and then rebounding. We've actually rebounded further this morning, so kind of changing that kind of theme a little bit in here this morning. So maybe setting up for a better day in here today with some decent strength already on the overnight. So we're still closed lower yesterday, but not as low as we were at one point during the day. So, intraday rebounds after weakness have been the order of the day. And to say we're actually looking to push a little bit higher on the opens this morning. Let's take a look at the what we've got coming up on the data front today. Really, the focus today is going to be here. Retail sales, just under 1 hour, 57 minutes time. Watching this retail sales data, okay? It's going to be critical. Got core retail sales and retail sales. Core 0.6%, retail sales 0.8%. Is the economy slowing in the US or is it not? Equally, we then have Fed speakers Bostic and Bullard are speaking a little later this morning, 08:45 and 0900 Eastern time. So watching out for those. We also get industrial production business inventories data later today, and also Michigan consumer sentiment 10 o'clock Eastern time. So watching out for all of those things, I think, going to be important. Retail sales is the headline data, so really watching that. I say that's just coming up in 1 hour. On the earnings side today, and now I've done the filters on here to have only the bigger stuff in here. We've already had a lot of this out. Most of this stuff's already out before the bell, and you can see a real mixed bag. Some in green, some in red. United Health beating expectations. Wells Fargo, little article on here. Wells Fargo profit misses on higher loan reserves, mortgage weakness. Okay, so we've had Wells Fargo underperforming there, BlackRock underperforming. US Bank Corp just beating estimates, PNC beating, Bank of New York Mellon mixed in here. So straight C, I don't see the data out yet. So Citigroup still to come, okay? That's a big one. So watching out for Citigroup later today. Remember yesterday, so Wells Fargo in here, but yesterday, where are we? Actually, no, it's the first one we had in here. Bank stocks, right? Bank earnings. We had yesterday Morgan Stanley and remind me, who did we have? JP Morgan and Morgan Stanley, right? Both missing expectations yesterday. So both were negatives in here. So disappointing bank stocks data. If we go and take a look at that, I'm just going back to yesterday. In here, JP Morgan and Morgan Stanley here, both missing in here. So a little bit of a concern there. But so we're going to get a load more next week. If I jump to next week's calendar, Bank of America, IBM, Charles Schwab, Goldman Sachs, Monday, Johnson & Johnson, Lockheed Martin, Netflix, the first of the big new media companies in here, reporting Tuesday. Then we get Tesla on Wednesday, Abbott Labs as well, ASML, okay, important. Further down the week in here, AT&T, Philip Morris, Union Pacific, and Verizon. It's not till the week after we get the real big tech, okay? But next week, a busy week as well to look forward to. But focusing in on today, we've had most of the earnings we're going to see. And if anything, they're disappointed, but the markets are still up. So the futures are up, pointing higher. So I say Wells Fargo profit misses in here. Let's take a look at run through what's been going on then. 5 things to start your day. Fed pricing, so 100 basis points started being priced in. We went back through all that. Federal Reserve Governor Chris Waller backed an increase of 75 rather than the 100, even though the market is pricing in 100. Okay, market's starting to price in 100. We looked at that in depth yesterday. I'm not going to go through it again in here. Actually, it's kind of ebbed a little bit. This was so in here. We've got in here, there's 75. I think this was a little higher yesterday, right? I can actually go in and check. So if we go and look at the historical for yesterday. So this is going to be on, actually just go back to that current So it's the 250 to 275 I want to look at. That's the 100 basis point hike. So 250 to 275, you can just uncheck all of these in here and leave the 250 to 275 one checked. Is 250 275. Yeah, so we were all yesterday, we're up at 80%. So fading slightly in here for the July meeting in just under 2 weeks time. Okay, so we spiked all the way up to 80.35 yesterday and now receding back lower a little bit in here. Let's get rid of that one there. So we did get that spike higher, moving back lower in here. So look, it's only a week ago, zero chance. Back on the 6th of July, yeah, just over a week ago, zero chance. We got up to 80% chance yesterday. Now we've dropped back to where we are now, which is like 40 odd percent. So if I go back to the current, so that has set back in here significantly in here. Okay, so less of a chance in here, but we will learn some more today. So remember, we're watching out for, going back to the calendar, we're watching out for Bostic and Bullard later today. And if we go to take a look at our, so on ITC, do this nicely, the Hawk Dove sheet from ITC. So in Touch Capital Markets in here, the Hawk Dove sheet. If we click on the Hawk Dove sheet, where are those guys? What are we looking for? Bostic and Bullard. Where are those guys on the Hawk Dove sheet? So if you don't know where they are, okay, Bullard's down here, so down very much at the most hawkish end. So if Bullard comes out and says 100 basis points up, not a big deal really, right? He's a hawk, so he's going to say that, right? They're going to say that. If we go take a look at Bostic, okay, where's Bostic in here? Don't see Bostic. Oh, here we are, bang in the middle. Right, so it's going to be important. If Bostic is leaning 75, maybe closer to 100, it says something hawkish, then that's a hawkish, that is definitely, if Bostic says something slightly more dovish, then that's definitely leaning towards a more dovish stance, given that they're more in the middle. So it's interesting. But non-voter, okay? Bostic a non-voter at the moment, okay? Bullard is a voter, okay? Right, what else do we have? 5 things to start your day. Yeah, so Fed pricing in. China slowdown. China's data in here is overnight. We saw that slowest pace since the country was first hit by coronavirus outbreak 2 years ago. So certainly a negative in here. The zero COVID policy obviously having a negative impact on the Chinese economy. Okay, texting fines, regulators. Okay, nothing that's not going to really impact us in here. Stocks rebound. We've spoken about that. European shares up this morning. Futures advancing as well. And US bank earnings coming up. We've already had Wells Fargo. Citigroup's the one we're waiting on. US retail sales very much in focus. Okay, futures crawl higher. Wells Fargo, negative results. We've already covered that in here, being covered by Reuters. US equity futures edging higher. Dollar surge stalls. Well, not going back down again, though, just stalling. Dollar's still very, very strong in here, although we have seen a slight stall on that so far today. So the euro, Australian dollar, slightly up. Dollar yen just dipping lower. But I mean, these are marginal. Euro's up 1/3%. Yeah, back above parity. And dollar yen just pulling back from the highs that we hit yesterday, the multi-decade highs from yesterday. So the dollar still looks strong in here. And again, look, Fed rate hike outlook and China slowdown filters across markets. So we've already spoken about that. This is a big one, I think. You know, copper falling further in here, below $7,000. Rout deepens on recession fears. Let me go and see if I can. I've already got this chart in here. So let me duplicate that in here, because I want to show you that in a second, that BTP Bund spread. But if I go in here and show you in here the copper price, so there's copper in here. Look, so this is on the COMEX copper. Okay, so that's 7,000 in here. Where are we? This is on the I think this is on the $7,000 a ton. I think this. Okay, yeah. It's a different contract to the one we're looking at here. Okay, but if we go take a look at that contract there, this is the COMEX copper down here. Look, so lowest levels in here. Look, this is a weekly chart. Lowest levels since back here November 2020. Okay, so copper plunging lower, looking vulnerable. So this is a negative. This is a real negative, and you see that. A massive sell-off in here. This is not the week. It says weekly there. It's not a weekly chart. It's a daily chart. Sorry. Okay. Switch it to a weekly in here. Okay, but you can see really negative in here, really negative for copper, and this is a concern because this is echoing the slowdown in China. Okay, very much a barometer, but also echoing the global slowdown. So this is a real concern, because this is maybe saying, maybe stock not going lower is not the right thing. Maybe this is telling us, this is flagging global recession. That's what this is flagging. Okay, what else do we have? So Italy risk political collapse. This is not going to help the euro. Some real political to and froing going in Italy. Draghi is the prime minister at the moment, ex-head of the ECB, obviously. Incidentally, he's now the kind of autocrat prime minister at the moment. He offered his resignation to Italy's president. The president rejected that. Okay, and now he's going to get a coalition support. But there's lots of to and froing in Italy, and the outcome of that was in here. We see this spike higher up. So this is the BTP Bund spread, 10-year yield. So this is basically the difference between BTPs, Bueno del Tesoro Poligonali. So that is Italian government bonds, and the Bund is German government bonds. Okay? So it's a spread between Italian and German government bonds. And this is a measure of risk, okay? So in the Eurozone. So when this spread widens, so the spread between these gets wider, it's showing fragilities. It means the peripheral of Europe, the Italians, are moving, the yields are going higher quicker than the German government bonds, or not going lower as quickly. So this means that this is a kind of a test of stress in the system, okay, in the Euro system. So the fact that we've been in this kind of range in here over the last few weeks is broken to the upside. That's a reflection of what's going on in Italy at the moment. We've spoken about copper. ECB likely to raise by 25 next week. That's pretty much nailed on. And 50 basis points in September. This is coming from Finland, the Finland ECB member, and Olli Rehn, okay, on a panel discussion. So, and the expectation is for a 25 basis point hike next week, I think it is. Yeah. EU to adopt on Friday new sanctions on Russia and tweak to avoid food shortages. And again, that's not positive, but at the moment, European stocks are doing well. We're between 0.5 and 1, up to 1.5% higher. The DAX, the German index, up over 1.5% in here this morning. And if we look at US futures, where are we? US futures having been lower yesterday, so the Dow ended up like just about 0.5%, but it's got that back, having had a bigger sell-off, remember, yesterday, and a strong rebound yesterday. So market looking firm, the stock indices looking firm going into today. I'm not going to spend too much time on this today, guys. I spent a lot of time on the charts recently, but suffice to say in here, if we go and take a look first of all at the S&P 500, in here we got that dip then yesterday. Remember we said splashing below those lows, maybe running some stops and coming back. It did exactly that. Nailed it, Steve, right? We highlighted these levels in here around the 41.40 kind of area, and the market broke down through those lows in here. As low as 37.35 there, got down to 37.23.75, ran the stops and came back. Look, a really strong intraday rebound. That's a really strong candlestick. This is called a dragonfly doji. This candlestick here, okay? I'll go out here and then let it zoom in. Will it zoom in from there? No, it's not going to make it any bigger, right? But this is a dragonfly doji. Market's been in the downtrend, 1, 2, 3 down days. Spikes lower, comes back. It's like a hammer pattern, but because it's open and closes basically at the same level, it's a dragonfly doji, and it's already pushing above yesterday's high. So this in here is signaling a bullish reversal. And remember, it's having flashed down below these lows, kind of respecting these lows. Run the stops below these lows and then straight back higher. We discussed that yesterday. Here's the 15-minute chart. So there's the market spiking below those lows. We said that, the initial trade was lower. We were bearish. It went below and then it's come all the way back. So this is now showing a strong recovery theme in here for me, and real upside risk. Yeah, I think it's a base pattern. You could argue in here, inverse head and shoulders, right? So in here, I'm just going to use this line that's already on there, but I'm going to take this line across here. Oh, maybe it's going to allow me. Yeah, like that. So here is the head. Okay, you've got shoulder here, shoulder here. These shoulders are almost the same size. You've got this big spike before it, but you've got shoulder, head, shoulder, okay? I'll just quickly put so you've got kind of this kind of head here. Here's the head and shoulders. Okay, and then can I just duplicate that? Yeah, I use so many different systems in here, guys. I remember which ones allow me to duplicate and which ones don't. No, this doesn't allow duplication. Shame. And then we've got over here, you'd argue shoulder here. Okay, and then another shoulder here, just to labour the point. There you go. And there's the neckline coming across. So we haven't broke that neckline yet. You used to argue the neckline's there. So up through the neckline's up at like 38.14. That will be a bullish signal, inverse head and shoulders. And you've got this kind of trend line. The trend line here, it's kind of not the best draw. Let me just redraw this. You got this one. Actually, if we take it off the highs now, this trend line coming off the high and then through this spike high. And I'll just pull that out. Slow there, not the best way to draw it, but you know that's going to be all that's kind of some way higher in here. Really through that neckline in there, and then that little swing peak there, 38, 34, 75. I can only be bullish on this. It's a really positive setup in here going into today. And you're going to get a similar story on the NASDAQ. Take a look at the NASDAQ. So the NASDAQ, remember, didn't go down to these lows, the same lows, the equivalent lows, held above those back on Wednesday after the CPI. And then yesterday was an inside pattern. Didn't even test yesterday's low. So if you look at on the NASDAQ on the daily chart, we've got 3 down days, and then you've got this kind of hammer pattern. Not quite the best hammer pattern because of it's an inside day. It's inside the day here. But then the day before, that Wednesday CPI day, is what we call a long-legged doji. And a long-legged doji, again, is a signal of a turning point. So we're in a downtrend turning point, reinforced by yesterday's hammer type pattern, not a perfect hammer, again, pointing higher. And if we step into the intraday chart, I've got a 30-minute here. So not so much inverse head and shoulders here, but you've got double bottom, right? Low here, low here. It's got to get up all the way through. Actually, it's just got through that high. The high between the lows is that high there. Okay, so I can just pull this one across here. Actually, just get rid of that. I can just put a horizontal line in off of that there, and you can see the market basically has been flirting with that level. Okay, that peak there, that's the high between the two lows. The high there is 11,854.5. Okay, and we have pipped above there, but remember this is in overnight trading. If we can get above and hold above the current high, back above here, 1185, the current high is 11,866. Back above there opens up plenty of upside. And again, look at, we've already broken up through this trend line as well in here. And even if you redrew this trend line, let me put that back on. Will it allow me to extend it? So you've got this trend line. It comes off of these 2 peaks in here. It's ignoring that peak. If you redraw that and you take it off of the other peak there, we're breaking that one anyway, okay? So the market's sending bullish signals in here from both indices. I can only come into today bullish on the charts, guys. That's the only way I can really approach that, okay? All right, I'm going to jump along to the to the commodities in here. Just a quick nod to the commodities. Daily gold. We did manage another new low yesterday. We were looking for that. We're sitting low level consolidation here, looking negative in here. The market has held it above this low. It's a little bit binary on a day trading here for me today. I'm still coming in from a bearish. You've got lower lows, lower highs all the way down. But we did just get a higher high there, and now we've got a higher low. So really, it's looking for the breakout in here. So you got this kind of, you probably redraw this trend line through here. It's not the best trend line. We're flirting with that. Up through the trend line, up through like 1709, 1710. This looks a little bit more bullish. If it takes out these lows back down through 1698 and definitely down below the low at 1694, 95, then it looks a lot more negative. For me, I think the risk is down, but if we do start taking out 1709, 1710, then you're looking to probably play it from the long side. Let's take a look at oil. So in oil, turnaround rebound. So this bullishness we've had from oil in here. Let me indicators. So again, look, this is like a dragonfly doji. That's a bullish turnaround signal. Okay, we're definitely in a downtrend. Big sell-off, big rebound. It really needs to get back. You know, you see this little high in here, got up close to that, and then it actually just got above that. If I step into the 15-minute chart, you can see, look, again, this looks like an inverse head and shoulders, right? I'm not going to go through and draw the heads and shoulders and everything in here. Let me get rid of all the old drawing tools. But in here, you've got shoulder, head, shoulder. What I will do is put the neckline on. Now, I would argue you've got to draw the neckline probably across here. Okay, so we've already broken the neckline in here. There's the head. So you've got shoulder here, shoulder here. You could argue you've just got a horizontal line that needs to get above that high there. And the market has just got above, just pipped above there just recently. I think you can get back above and hold above there, 97.90, 98.00. Where's the peak from overnight? This morning, sorry, 98.08. Up through 90, back and holding above $98 in here opens up a bigger recovery effort. And particularly if it's helped by stocks going higher as well. Okay. All right, guys. That's everything I've got in here for you today. I'm going to wish you all a great trading day. Have a great weekend as well. TGI Friday and all that. I'll be back with you with another bull versus bear webinar tomorrow. Not tomorrow, Monday. Have a good weekend, guys. Bye.